The winner of today, drum roll please, are the regional banks. The failing regional banks with massive unrealized losses. No, I'm kidding. The winner of today is energy. Objectively, it's energy. But regional banks, for most of the day, were the winner until the very end. They gave it up. I don't know if we can rally like this. I saw a very legitimate argument that, the mega cap tech pullback, we can just brush it off because the equal weighted strength was playing out. And I've seen this once before, just a few weeks ago. If you look on the chart, you look at RSP equal weighted S&P 500, you'll see a 3-4 day very strong 5% move in the equal weighted indices. This is crazy. I mean, it didn't last. It had a 3-4 day mega spurt. And this area of the market has been hit the hardest since the last FOMC meeting. It's probably the only area of the market that has accurately begun to move to the fact that the Fed is serious. Wow, the Federal Reserve is a serious entity. Who would have guessed? Equal weighted indices, the one area of the market that finally decided to actually do something about that. And today, they just happen to not be doing so. I mean, today is full of problems. It's full of problems. We finally, I don't know if it's going to hold. I've been tricked a number of times this year. I've been teased, I've been seduced, and I've been taken to the room in the back of the club and shot by a big Russian mobster. I've been seduced by the woman, and I've been extorted. That's what's happened this year. So I'm not ready to say, here we are in the big pullback or something. But what I do know and what I can see is Tesla and Nvidia cracking at the same time. I mean, that was really good. And that was after being down in the pre-market, going green after 30 minutes of high intensity, high volume trading. And then as the day went on, the air just got deflated out of the balloon. That's what happened. Fight me on it if you want. That's what happened. That's how I saw it. So, I think while people are seeing the inflated stuff pull back and they're actually recognizing, oh, wait, maybe this stuff is at a peak, maybe there's a bit of a reflex move into stuff that is cheaper, regional banks, which are the cheapest. And I'm not trying to make a value judgment on the regional banks, okay? I'm not a full financials expert. This is thick weeds. I owned a regional bank for 2 days this year, and I just decided, you know what, this isn't for me. I'm going to get out. I did own another one way deep into the crisis, but when that equal weighted rally was going on, I did have a regional bank for 2 days, and I got rid of it because I just don't want that kind of uncertainty and unknown exposure, particularly after or in the midst of a tougher year for me. Anyways, I'm not convinced that the banking crisis is over. As a matter of fact, I actually think it's going to get worse. I saw something about, not Deutsche Bank, but another German bank needing to go under recapitalization. I thought European banks were even stronger than ours. That's clearly not the case. They also have a lower reserve requirement, at least for the major banks, than us. So we might be starting to see some cracks in that. Kashkari, who oversaw TARP, the Troubled Asset Relief Program during the 2008 financial crisis, is saying rates could go north of 6%. If there's damage done so far, that's going to cause more damage. I don't know how many banks right-sized their balance sheet in the recent fall in yields over the past couple months. But my assumption is that there's going to be more failures. And I think this is pretty much confirmed by the Fed, which says more mergers might happen. Janet Yellen, which says more mergers might happen. More mergers might happen for banks is code name for more banks are going to fail. Okay? I'm not saying anything about the effects of that. I'm just telling you to have this sector leading when there is a very clear, obvious effect to them. Last year, was, I believe, like the worst year in like 250 years for debt securities. So that's all these guys have, pretty much. That's all they have on their balance sheet. They have some banks have some, trading revenues, investment banking revenues, but the big thing is they've got these assets in the form of loans, and they've got these liabilities in the form of deposits. And it can fluctuate, but this is not, a speculative asset. This is technically a speculative asset. It goes like this, and right now it's going like this. So they deserve the lower multiple. Financials are the second cheapest sector behind energy. So today I just think was a reflex. Oh, I got to get out of the expensive stuff. I got to get into the cheap stuff. Well, I'm definitely not saying energy is, a bad area to be. It's my largest allocation is to energy. But I don't, and I'm not saying that I'm going to exclude energy because energy is its own thing. The Federal Reserve excludes energy, okay, and food. So I'm excluding energy. The move into the regional banks, into the cheap stuff, I just think it's not something that needs to happen. I think this is a one day. People are trying to figure things out. People are still trying to digest the Fed. We're obviously ahead of that game. We've been digesting. We've been digesting the Fed. We've been ahead of the Fed, or ahead of the market on the Fed, and that's my opinion. You can make that judgment for yourself. But I think we've done a pretty good job digesting the Fed, and I think a way better job than the overall market. Anyways, enough, ego bragging or whatever. Anyways, I think today is very much a trying to figure things out day. And I think we have another day for that later this week, just like we had last week. Isn't that so convenient? Jerome Powell on Wednesday, midweek, midpoint of the week, right on the nose of the market open, is speaking with a total of 4 central bank heads. Powell, U.S. central bank head, Christine Lagarde, European central bank head, something Bailey, UK central bank head, and I don't know the Japan central bank head name, maybe Kududo, something like that, maybe. Central bank head, all speaking on CNBC. And CNBC is an outlet to talk directly to the market. This is a mainstream media source. They call themselves first in business worldwide. This is a direct address to the market amongst all the central bank heads. Japan, obviously doing its own thing, but they are now experiencing some problems. Maybe this is their pivot, but what we know is Europe and the UK are surprising in the hawkish direction. The United States recently surprised in the hawkish direction. So I expect Powell to continue to communicate because this is not something that the market is reacting to. Let's not forget. You look at the market, okay? It was very much on the same trend, fundamentally, as last year. We had that January rally. It just lasted a month. And then we started pulling back. And we pulled back until the day SVB failed. And from the day SVB failed, tech, particularly the Magnificent Seven, has just gone bananas. The best first half of the year for the NASDAQ ever. This is currently what we are in. I don't know if it's after today, but I saw this morning. We are currently on pace for the best first half of the NASDAQ ever. Why is that? Because when SVB failed, the markets thought the Fed was done. They had broken something. The game was over. Inflation was falling like a rock. Game over. Time to go long. Buy these stocks because yields are going to fall. That was the play. That play worked, but it did not. It was a castle built on sand. It was not a castle built on rock. We are building on rock here. The Fed has not done that SVB pivot. It's hiked twice. It says it's going to hike twice more. It says it's not going to cut for most of next year. These are big things. I think they're going to affect the market dramatically. And I think Powell is going to continue to deliver that message and try to jawbone the market. What's his name? Barkin talked last Friday after the close about the notion of asset price inflation combating monetary policy. I think that was a hint on Friday after the market, before Powell, that they aren't liking this asset bubble that we're going into. The greatest, strongest first half for the NASDAQ ever. And it's 7 stocks. So I think it's a crazy time. But I think fundamentals will ultimately prevail. And us, the viewers, thank you for watching these videos. I hope you like and subscribe. But we have learned some lessons here. Meditate, find peace, and analyze the situation. If you have taken losses like me, there's plenty of lessons to be had here to make us better for the future, more prepared for the future, better understanding of the market, so we can get ahead, we can dominate, and we can generate returns. So, that's today's video. We're going to see what happens. I'm not convinced that, we can ring victory yet. We don't want to ring victory too early. That has been a troublesome spot for me so far this year. However, I think the fundamentals are heavily in at least my favor. And I'm willing to be patient to see how they play out. So, that's today's video. And until next time, peace out.